My trade plan for 2025. Hi, and welcome to this first video of the year. Right, so my trade plan. Now, one thing that I would encourage you to do would be to go back to two videos that I recorded. One was on the, I'm trying to see the dates now. Yeah, it was called The Biggest Trade of 2025, which I recorded on the 23rd of November. So if you didn't see that, I would encourage you to just go and see that. It was on the 23rd of November, and that was called My Biggest Trade, The Biggest Trade of 2025. And then the other video was titled Could the Euro Crash, which was on the 7th of December. So I would encourage you to check those two out. Right. Now, as far as going forwards now, we're going to go through some technicals. So I've obviously, in those videos, gone through some technicals. But do bear in mind, I have a trading community, and so at CBT, at Charlie Burton Trading, and so when I go through videos on YouTube, I keep them at a high level. Okay, so I'm not going to go into all the absolute detail and intricacies of exactly what I'm doing, because that's for my trading community where I spend all week with our traders. However, I'm going to talk about the general themes here, and that's essentially what I'm going to be trading, and I'll talk about how I'm looking to navigate those general themes. Okay, so let's get into the charts here, and I'm going to start off with the dollar. Now, what's interesting about the dollar, and I'm starting here with a 3-month chart. Each bar is 3 months long, so I'm going out to the much bigger picture first of all. And of course, I've already covered this in those previous videos, so I'm not going to go into too much detail on that. But what was interesting with the dollar itself, first of all, I don't trade the dollar index, of course. I'm just bringing the dollar up first. We're really going to look at some of the currency pairs. The dollar itself was underwater for the year right away until we got to the final quarter, until we got into October. So the dollar was down on the year. So last year, I was actually trading much of the time on the short side, or shorting the dollar, should I say. So I was buying other currencies against the dollar. And then we had this massive turnaround, and then sort of midway through that turnaround, then I started to trade on the long side of the dollar once it started to show more evidence of a technical change. Okay. So where we're at right now is, as I said in that video back in November, the dollar has broken up above this range of the past sort of 18 months to 2 years. So if I go to a monthly chart, we can see this range here from the last 2 years. We've now broken up through that. So of course, the theme coming into 2025, until proven otherwise, is going to be be on the long side of the dollar. That's essentially what I'm looking at. Okay, so within this, if I go back out to the quarterly chart and just zoom out a little bit, where should we be looking towards as far as next levels or where the dollar could go to? And so in normal technical analysis, we would be looking, we've done a pull with essentially what have we been doing? So since making the low in 2007-8, the dollar has been on this general upside trajectory with plenty of pullbacks in between, which, on a quarterly chart are more than tradable. I mean, one of my best trades of recent years was actually shorting the dollar pretty much around that trend channel line up there. But right now, where would we be looking, considering we've done that pullback and now started breaking up? Well, we have to look towards those prior highs, okay? And then somewhere beyond that would be this trend line as well. So the potential, it's not a guarantee, but all we do in trading is trade probabilities and potentials, and the rest is just down to risk management. And managing your stops, managing how much risk you want to put on per trade. And I think this is where a lot of people get trading wrong, in that they think they've got to be right too much of the time, and you just don't need to be, as so often evident. Some of the world's best traders and have a 30% win rate, and people are like, oh, surely you've got to be right more often, and that's just not the case. You just manage your stops and the trades, and a lot of them will just get stopped, and you only need those few big winners to more than end up paying for the losers. In fact, it was about this time last year that there was a hedge fund manager, I can't remember the name now, he'd done something like 115%, I think it was, and he had something like a 28% win rate. It was something like that, may have even been slightly lower than that. Yet a massive gain for a hedge fund there. So that was announced, that came through this sort of time last year. Okay, so we got that level there. Let's now translate this across into currency pairs, because people aren't trading the dollar index per se. So if we now, I'm going to start off with the Aussie dollar actually here. So because this is quite an interesting chart here for the Aussie. So this is a long-term chart going way back here. So we can see that the Aussie is into a key area at the moment. Historically, I've had this line on my chart for a long time, and here is the Aussie back down at these lows down here around the 62 area. So again, depending on the type of trader you are, you're either going to look at this and say, oh, it's going to bounce from here. And don't get me wrong, the Aussie, and we'll go to the smaller time frames, and you'll see where the Aussie could indeed have a bit of a bounce from here. But there's one principle that I use in trading called pebble on a pond. And that's this principle that if price keeps coming back to test a level, like skimming a pebble across the surface of a pond, the initial bounces will happen as you skim that pebble across the top of the pond. But eventually the momentum will start to wane, and then that pebble will plop through the water surface there. And it's exactly the same that we see in the financial markets, that the more times the price keeps coming back down to test a level, it's more likely that it's going to actually go for a break. It keeps on testing these levels, and then it's going to go for a break. So in the bigger picture, looking at the quarterly chart, taking into consideration what I've just said about the dollar, and do check out those videos, like I said, from November on the biggest trader 2025 on that 23rd of November video, where I was talking about some of the macro events coming as well. Obviously with a new US president, with Trump in power, and all the things that could happen there. So I'm ultimately going to be looking, if I'm looking for the dollar index to continue to push higher now, technically now it's done that break, then therefore I should be looking for the likes of the Aussie to push lower. Now, when it comes to trading, as I often say, different traders are going to have different opinions, and that's what makes the market. So if you're sitting there thinking, no, Charlie, the Aussie's going to do a massive bounce from here, and yeah, fine, that's what makes a market. You need to have people with different views, and that's what happens on a daily basis in the markets. I'm just presenting to you my view, and I'm not going to go into all the detail, because like I've already said, that's what I share with, obviously, in my trading, in the community, in my trading room. But I'm going to talk big picture here. So I'm ultimately looking for the Aussie to break down here, pebble on a pond. And if the dollar index has got that sort of scope that I've just suggested, that should translate to the Aussie coming down to around about 55. So and testing these next levels down here. And that's about, what, 700 pips lower. Now, for a lot of traders, that's not really that much use to you. As a general theme, yes. But for a lot of people, they're not going to want to put a trade on and then hold it for 700 pips necessarily, because that could take several months. to be in a trade like that. But I'm just giving my overview. So you might then say, well, okay, if the Aussie continues to break lower here, then yes, you want to be continuing to trade that theme. And I'm talking about what my trade plan is to be trading this theme. How the specifics of how I'm trading that theme is, slightly different, and that's what I share in my community. But nevertheless, I'm talking about, yes, this is the theme that I'm looking at. Now, if we zoom in a little bit, if I come to the monthly chart for the Aussie, again, we can see that level. It's a key level at the moment where we should at least expect about some kind of bounce for the Aussie here, considering the levels that we've come down to. So we've done a technical breakdown of this trend line here, which was supporting price. We've broken that, and we've now come into those lows from October 22. So we should expect that. Now, expecting something doesn't mean say it's guaranteed to happen. I'm just saying that we have to, even if we're, like for me, I'm bearish the Aussie dollar because I'm bullish the dollar itself. I have to expect bounces to come. So it doesn't mean say it's going to, because we might just plunge straight down here. But at least if I'm expecting bounces, then I can map out a plan if we get said bounces. So, for example, I might be, let's say you're sitting there on the outside at the moment, and you're on the outside of all this, and you're saying, okay, I'm looking now for new opportunities to short. Where am I going to short from? Oh, okay. Then you start to you've got the overall template here to say, yeah, I'm looking for this to break. If we get a bounce, I want to be shorting a bounce. So we come down to the weekly chart, and we can start to pick some levels and say, well, if we do get a bounce, because it's been quite a one-way street overall here, if we do get a bit of a bounce coming, where do we want to be looking into? So then we can look into some really nice levels around here, somewhere in the mid 63s. Wouldn't be a bad zone to be looking at shorting opportunities. That's how I would be looking at this if I was on the sidelines right now and thinking, okay, I want some of this action. Where am I going to be looking at? So certainly up to that sort of zone would be a level there. But it doesn't mean to say that we have to. We may just plunge, but there will be retracements at some point. There always are retracements in markets. So that's for the Aussie. Now I can come down to the daily chart, but the daily chart, again, I can use moving averages as well. So we've got a 50-day moving average, my black moving average here. I've got some shorter time frame ones here as well. So again, with the trajectory of that 50-day moving average, by time price, if it was to start retracing, yeah, it probably would come into those, as that's coming down to meet price into the 63s. So it marries up quite nicely with some of those prior lows. So that's how I'd be looking at that. But overall, again, if I come out now to the quarterly chart and I now go to the euro dollar, the biggest currency pair, then again, a slightly different looking chart. I've got two channels here. I've got the big rising channel going way back to before the euro existed, and it was just a composite of the French franc and the German mark, etc. Because remember, the euro only came into being in 2002 down here. But again, the euro is in this declining channel here as well, and it failed last year to break the channel, much like the dollar in the end failed to break lower. It was underwater for much of the year, the dollar, much like the euro was up for much of the year, and in that last 2 to 3 months they rolled over, so or turned. So for the euro, it's trading within this channel. So like I've already said with the dollar index, well, for the dollar index, I was looking at that prior high from 2022. So the corresponding level is for the euro is the prior low from 2022. Now, of course, parity is going to be an important level. And if the euro does get down to parity at some point, down to 1, then we would be expecting, or at least looking for, bounces, because there's going to be technical bounces coming on all of these markets at any time. Much like I've just said about the Aussie dollar, there of course are going to be people and reasons why, technically, why the euro could even bounce from where we are right now. So because we've come down into this whole price zone down here, the lows of this were around about 103.50 roughly, but we've actually come down to what, 102.20. So I'm seeing overall we've done a break here. We tried to break down here. It was a failed breakdown in 2022, but we've also now failed to carry on breaking higher back last year in 24. So the fact that we're rolling over, we've technically taken out lows. We have to at least assume for the time being, much like I'm assuming for the dollar index. Like I've said at the beginning, we're dealing in probabilities, not absolutes. But markets in technical analysis will continue to make new highs until they fail to make new highs. The trend is your friend until it ends, and it's exactly the same here. So now we're rolling back over again. We're looking for what? Price to make new lows until it fails to make new lows. So for now, we have to assume that the euro here, much like the dollar making new highs, and the euro making coming down to test those lows. So there's going to be plenty of levels along the way. But what I'm talking about here is 2025, and how I'm at this stage, how I'm looking to trade 2025. So I'm going to trade this theme, this dollar strength theme overall, whether I'm trading the euro dollar or I'm trading any of the other currencies against the dollar. Essentially, it's the same story, that the dollar index has plenty of upside, and the currencies against the dollar therefore have plenty of downside. And so I'm going to be trading that theme. So then it comes down to, how am I going to go about trading that theme? I'm already positioned to an extent in this regard, but I want to continue to trade this theme. So generally speaking, if I come down to maybe a monthly chart and then I'll come to a weekly, we can see that technical breakdown even of those lows of 2016-17 there now. So we are looking back down towards parity and below. And what I think is interesting at the moment is, there's plenty of financial journalists and bank analysts talking about parity, but not many are talking about those prior lows from 2022 at the moment, which I think is interesting. Anyway, how am I going to be looking to continue to trade this theme? The predominant trend is to the downside until proven otherwise. So that's where the evidence is at the moment. So it's not to say that this couldn't completely rotate for whatever reason, and we end up at the end of this year with the euro back up above 110 or whatever. But all we can do is trade what's in front of us with the available evidence that's there as technical analysts. So I'm going to carry on trading this theme. There's going to be, within that theme, if I come to the weekly chart now, so much like the Aussie dollar, there will be bounces. We're going to see technical bounces which could last multiple weeks. And but until proven otherwise, I'm going to be assuming that all bounces are just that, like with any other trend, like the trend in 21 coming into 22. There was plenty of multiple week bounces before rolling back over again. And during those bounce periods, there was plenty of news coming out which would have been supportive to either the euro or would have been negative towards the dollar, which helped produce those bounces. But overall, they end up fizzling out, and so you have to be careful of the news. The news is important because it drives the short-term sentiment, of course, but don't get too caught up in it and think, oh, that's it, there's been a weak jobs numbers or whatever it might be. Well, yeah, that may produce a bounce. We've got non-farm payrolls coming up next week. And if the numbers are weaker, absolutely that will allow for a bounce. But technically we are in a trend here, and so we have to assume, much like in previous periods where there's been multiple weak bounces, they've just fizzled out, like in any other trend, whether it's to the downside there in 22 or even to the upside there into 23. So my overall game plan is, overall, I'm going to be ignoring bounces. I'm not trying to trade every move. Some traders will be, and they're trying, and there's nothing wrong with that, because some technical bounces can end up, bouncing for, a couple hundred pips or more potentially. But my general trade plan for 2025 is to, in the main, and I have to say in the main because there might be some points where I might be looking at hedging or even taking a technical bounce, especially against a key level like parity. It's possible, depending if there's patterns down there. So I'm not saying definitely I'm not going to trade on the long side, but my predominant trade plan is to be trading on the downside next year, whether it's the euro, whether it's the Aussie, whether it's the Kiwi, whether it's even the pound. I've got the Kiwi up here. Again, it's the same story. They've all got the same narrative at the moment. They've had these technical breakdowns, and of course, at any moment they could put in a multi-week bounce, considering it's been quite a relentless run when we're looking at the New Zealand dollar here to the downside since late September, early October. So, of course, they could put in a multi-week bounce. What produces a multi-week bounce? Funnily enough, some key economic reports which turns the dollar, at least in the near term. But until proven otherwise, until technically we get a major turn, we have to assume that anything like that will create a bounce, yes, but it will end up fizzling out. So watch out for that sort of thing. So my general plan coming into 2025 is to continue to trade the downside in the likes of the euro, Aussie, New Zealand dollar, any of those currencies, effectively the long side in the dollar, until proven otherwise. That's where I'll be trading. So, and of course the intricacies of where I trade and all of that is, that's the detail. But that's going to be my theme there for much of 2025. It depends on what happens, of course. If we come back out, if we came down through 2025 and we're already down at those lows there from 22, then of course there's going to be other trading to be done. That would be a key level. If in several months' time we're down there, then of course I could be looking. There could be some nice setups for the long side at that stage. But at this stage, until we get down to that, that area down there, then my general theme is going to be on the short side. There's going to be levels that I'll be banking profits at and whatever as a trader, but generally that will be my thing. And then post that, if we were to get down into that zone and somewhere down in that area, again, it depends on what's going on at that stage. There will, like I've said, there could well be some really nice technical long side trades, whether it's the euro here or going back to the Aussie. If the Aussie was to get down into that technical low here, spike low, if I zoom that back out and take it back to the quarterly chart there, then again, if we came down to there could be some nice potential counter moves as well. Because again, ultimately, looking at the Aussie, this lovely trend line there, so often at some point, even if it came down to here, for example, at some point there will be another attempt at that trend line and potentially a break and all of that. So that's my overall game plan coming into this year. Certainly in the first, however, let's say the first half of this year, is to be trading this dollar strength theme. And it does not mean that on any given day or week that the dollar's not retracing. That we already know, coming back to the weekly charts, that there's been a relentless run down for the last 3 months, generally speaking. So at any moment in time there could be, as I keep saying, a multi-week bounce, but that won't change my overall view, unless technically these have a material bounce way higher. So now it doesn't mean to say that from a trading perspective traders won't be trading these bounces if, as and when, and if they come. They will come at some point, but my general narrative is going to be to focus on the bigger theme. And so when we get bounces, for me, rather than trying to trade every bounce, I'm more likely going to be looking to sell the bounce once it comes in. That is pretty much me, and that is done for today. That is pretty much my overall game plan at this stage in 2025. Obviously the game plan will need updating as we go through the year, but I'm giving you a very high level view of the market without me going into all the intricacies and the technical intricacies that I've been looking at and building over these past couple of months or so. But nevertheless, that's my game plan until proven otherwise. Hopefully that helps. I shall see you probably middle of the week next week.